Now let's segue over and into swing trading today, and we'll open the conversation up to non-members as well. Let's get to it. Folks, welcome to Swing Trading Today. This is Bob Desmond, the Contrarian Trader, and it is at current 5:50 in the a.m. Eastern Standard Time. Let's do a quick review of the pre-market activity. I've already gone over our closing day price action with members on morning update, and I will be doing best stock charts for the coming week tomorrow. So if you're not currently subscribed to our free newsletter where you receive best stock charts each Saturday, please enter your email address. We hate spam too. We'll send that out to you tomorrow. If you're not following me on YouTube yet, please follow me there. Leave a comment and click that bell notification. You'll get notified of future videos. All right, let's get to it. The conversation that we're going to have right now is first the pre-market activity. Then we're going to segue over into members' stock chart requests, which is where I review the symbols that our members submit for me to review. Let's begin here with the pre-market activity. S&P futures, they are up this morning, folks. This is not what bottoms are made of. While we could pop higher here with economic data coming out at 10 a.m., consumer sentiment, and with earnings coming out by Citigroup, JP Morgan, Chase, Wells Fargo, and I believe PNC Financial as well, we could get a pop higher on the markets. Do I think that this is a bottom? No. This is not what bottoms are made of. You don't get bright green futures at a bottom. You get ugly, down, red futures, and then you reverse to close higher on the day. That's a bullish key reversal and a sign to start nibbling. We're not there yet. A lot of margin calls out there causing forced liquidations along with institutions. So be careful. Don't go chasing this market. That's my suggestion anyway. The NASDAQ Composite up really strong this morning, up over 1.5%. We were higher. We backed off some. Now, the key for the NASDAQ right now is to close above this resistance level here in purple. We're above it right now, but this bar only opened up a few moments ago at 5 a.m. It'll close at 9 a.m. If we close above it, it's bullish. If we close below it, it's bearish. RSI has broken out above resistance. You can see here we had a W formation. We pulled back after the breakout, retested the breakout point. We continue to rise. We need to get above this resistance level here. We're right at it right now. Again, we need to close above this purple line here by 9 a.m. Eastern Standard Time, or else this rally could quite very well fade. The U.S. dollar showing some strength here, attempting to recapture a support level. You saw topping action the last 4-hour bar. At current, we're above support. What matters is where we close, right? Right now, it means nothing where we're trading. At 9 a.m. this morning, we want to see either A, a close above it, or B, a close below it, because nothing else matters. If we close above it, well, then you'll see weakness on gold and the miners, as well as other commodities. If we close below it, well, you'll see a continuation rally on those names in all probability. Speaking of gold, let's get to it. We were lower earlier, down about 7 points. We are now well off the lows. A nice orderly pullback here. So gold is looking very strong, despite the fact that we are down right now. We are long of gold. We added more to our gold mining position earlier in the week, and we are up significantly this week on that trade. And we will be looking to add more. Members, expect an alert. Silver, gaining strength this morning. We broke out yesterday on this 4-hour bar above this resistance level. We've pulled back and retested not once, but now twice. And now we appear to be setting up for a breakout. Oil flashed a head and shoulders top, left shoulder, head, right shoulder, and we broke the neckline here. So we have lower highs and lower lows getting put in. I don't think that it's time to buy oil yet. Now, when I say it's a top, it's a top on a short-term basis. The higher level view, meaning the longer-term trend for oil, is still up. But is it time to buy it right now? No. Bitcoin, you know, for a currency that's supposed to replace gold and be a safe haven in times of crisis, it hasn't lived up to its advertising at all. You've had capital flight out of China. Bitcoin goes nowhere. You've had a ruthless sell-off in the stock market and in the bond market. Bitcoin goes nowhere except down. Now, when would I be a buyer of Bitcoin? Why are you so inclined? On a rally up and through this resistance level here. But right now, all we're seeing are lower highs and lower lows. So I would not be a buyer right now anyway. Folks, let's segue over and into Members Stock Chart Request, which is where we review the symbols that we're watching as trades, as well as those trades or symbols that our members submit for me to review. The first chart up is DRV. This is the Direxion Daily Real Estate Bear ETF, leveraged ETF. Weekly chart. This is for Tom. And we have broken out above resistance here in blue. Would I go buying? No, not yet. I think it's had a really good week. We're up, what, over 7% on the week. I think that we need to get a pullback and a retest of the breakout point because this thing has been in a downtrend for a long, long time. Now, we did manage to rally earlier in the year, but that rally faded and we put in new lower lows. So I think that we need to reset the clock here, watch for a pullback and a retest. If we close back down below 9.78, we would need to avoid. Daily chart, an absolute monster day yesterday. It looks like it wants to go higher. RSI rising, Stokes rising, beautiful double bottom setup here, and rising on Stokes. It's hard to call this a momentum play because you have so much overhead supply here, meaning a lot of resistance, prior buyers looking to get made whole and selling when they finally get this red entry on the trading platform turn green. It's more of a fear trade. We've already had a lot of damage done to this market. So if you're going to buy it as a momentum trade, I think that you're accepting a lot of risk. I wouldn't be a buyer here. I would wait for that weekly chart to get a pullback. I think that longer term, you could have more upside potential if you waited for that weekly pullback of the breakout point and then look to get long. Right now, I think you're accepting a little bit too much risk. Can it move higher here? Sure, but I think you're going to get a sell-off. That's my take. I'm worried about the volatility here. JP Morgan absolutely crushed yesterday. They're reporting earnings today. But we did bounce off of support, and we are leaning into the third standard deviation Bollinger Band. We're due for a pop. Will it hold? Is it the bottom? We don't know yet. But a very strong earnings report could light a fire under JP Morgan for the next several days. Let's take a look at how Citigroup closed out yesterday. They also report earnings this morning. Similar technical damage as to what was done on JP Morgan. A bearish key reversal bar. You know, you need to really, to appreciate the damage that's been done and where support levels are, you need to take a look at a weekly chart. And man, this is ugly. I'll tell you, if we break 63.98 on Citigroup, you're looking at a new bear market. I'll make that call because that would be so technically damaging. You need your banks, folks. JP Morgan, let's go back to it really quick. Not as ugly as Citigroup, meaning Citigroup put in a lower high, whereas JP Morgan was able to put in a higher high before rolling over. We had a failed breakout. Now, if we take out 103.66 and close there on JP Morgan, you're looking at a serious technical breakdown, which will probably take the rest of the market down along with it. IRBT, iRobot. I'm going to use the weekly charts here, folks, because we want to identify where we have historical support. I think we have more downside potential here, and we could quite possibly move down to, I think we could move down to 79.40 per share before all is said and done. So I would not be a buyer of iRobot. Daily chart, bearish reversal bar. That doesn't mean we can't get a quick short covering rally. But I think that rally is going to fade. We are not at a support level yet. And you can have mini support levels like I had here. What you need are real serious support levels, which have acted as either resistance or support or a mixture of both in the past. And I think we need to see a 70 handle to make me comfortable with these shares. FIZZ, National Beverage. Let's stay consistent, go with a weekly chart. If we close out the week below 102.13, I think we're coming down to, at a bare minimum, the low 90s and quite possibly an 80 handle. I would avoid these shares. Let's take a look at a daily chart. And the only reason why I'm looking at the daily chart, folks, is to identify whether or not we have a short-term swing trade pop opportunity here. Nothing sexy. I think that this Stoke here, the rounding top below 20, is a harbinger of bad news. I think that FIZZ quite possibly is going lower. Might it hold 98? Sure. We've had 2 sequential days of it holding that support level. We do have history of it holding prior. It was support back in June. It was also resistance back in June. So maybe we'll get a pop. The risk to reward is not in my favor. I would not be a buyer at these levels. I need to see lower lows with a risk to reward far more in our favor. Facebook, it actually closed up yesterday. I've been bearish on Facebook for months. Take a look at any one of my videos on YouTube. I had been calling for a correction. I think that these shares are going lower, but first, I think we'll probably get a rally. Why is that? Well, let's begin with a weekly chart. We do have support below right at 144.56 and at 149.02. Our low of the week was 149.16. So we're flirting with the support level. Now, what we're looking at as well here is a 1-hour chart. And if I'm looking at a 1-hour chart, it certainly doesn't mean I'm looking at it as an investment. But we are beginning to see higher lows get put in. Now what we're missing, okay, this is better. Now what we're missing are higher highs. You can see we have resistance at 154. If we rally through 154, and especially if we rally up and through 156, I think we're going to get a short covering rally on Facebook. Do I think it lasts? No. One of the main reasons is that they are alienating their conservative user. What do I mean? Well, ever since the banning of Alex Jones back in August, Facebook has been banning conservatives right and left, and they closed 600 conservative accounts yesterday, a few of them with millions of followers, accusing those sites of inciting violence or whatever nitwitted excuse they came out with. Do I want to own shares in a company that is going out of its way to alienate half of the population of the United States? No. They haven't gotten the message yet. I think that they're going lower longer term. In the short term, we may get a pop. And that is it for this morning, folks. Everybody have a profitable trading day. Remember to enter your email address, get best stock charts sent to you tomorrow. And please follow me on YouTube. And heck, while you're at it, sign up for the 14-day free trial offer. Cancel at any time. And again, have a profitable trading day and enjoy your weekend. Be well.